All right, welcome back. Chance McQueen here. Today, we're talking about, something that affects almost every working adult in this country, and that's the tax changes coming into 2026. Now, I know tax talk can be, can feel dry, confusing, and honestly, a little intimidating. But here's the truth. If you understand what's changing early, you can position yourself to keep more of your money. If you ignore it, you're basically volunteering to overpay. And nobody wakes up excited to donate extra money to the IRS. So let's break this down in real life terms, not in accountant textbook language. First, big thing is the standard deduction continuing to increase. Now, what does that actually mean if you're, for us regular people, right? The standard deduction is the portion of your income that is basically protected from taxes. It's like the government saying, we don't touch this first chunk. When that number goes up, more of your income sits in that protected zone. For a lot of households, especially middle income earners, this means automatic tax relief without doing anything special, no extra forms, no complicated itemizing, just built in breathing room. Now, let's talk about something that hits close to home for a lot of working families, and that's tips and overtime income. There are new deductions, opportunities tied to these income types. And if you're someone working extra shifts like my mom did when, back in the day, she refused to do overtime because the government was taking way too much. Anyways, working weekends, picking up extra overtime to make life happen, this matters. Historically, that extra income gets taxed pretty aggressively. The potential shift here is that some of that income may get treated more favorable. Translation, you keep more of what you earn. And honestly, if you're sacrificing time away from your family to earn it, you should keep more of it. Next, let's talk about seniors. If you're 65 and older, or you have parents or family members in that category, there are potential bonus deductions, opportunities layered on top of the standard deductions. That means additional tax relief without needing complicated financial planning strategies. For retirees on a fixed income, this can be a meaningful difference in monthly cash flow. And when you're living on retirement income, predictability is everything. Now, homeowners, this is big. The state and local tax deduction cap, also known as SALT, has been a pain point for years. The potential increase to cap could open the door for significantly larger deductions for some homeowners. That means property tax and state income taxes could actually work in your favor. Again, instead of feeling like dead money. And here's something I really like. There are deductions being discussed that don't require itemizing. That is huge because historically, if you didn't itemize, you lost access to a lot of tax advantages. Simplifying deductions make tax planning more accessible to everyday people. Families with kids, listen up here. There are adjustments being discussed around child tax credits. Credits are powerful because they reduce the tax bill dollar for dollar, not deductions. Credits that's like paying your tax bill with a coupon. Here's the real talk part. Tax law is always evolving, and the biggest mistake people make is reacting. Instead of planning, people who win financially are the ones who look ahead, ask questions early, and build strategies into going into the year, not just into April when panic mode kicks in. And let me tie this into something I talk about all the time: financial positioning. Whether you are trying to buy a home, refinance, invest in property, or just stabilize your monthly budget. Taxes are part of the equation. Your take-home pay, your debt ratio, your savings ability, all of it connects back to how much you keep versus how much you send out. So here's the move. Talk to your tax professional early, not in March, okay? Not when you're already stressed, early. And I stress early. Understand how your income type, your family structure, and homeownership status, interact with these changes, because the goal isn't just to survive tax season. The goal is to build a life like where your money's working for you year round. And at the end of the day, knowledge is leverage. And the earlier you understand these shifts, the more control you have over your financial future. If you ever want to talk about how this connects to home ownership, cash flow planning, or long-term wealth building through real estate, reach out. No pressure. Let just real conversation and real strategy. Lock 'em and dock 'em, and please like, subscribe, and set your notification when episodes come out. And we'll talk soon. All right.